morning, everybody. I'm from the Hong Kong Trade Development Council. So I'm going to briefly report to you a recent survey we have done among Hong Kong traders on their changing view or their changing sentiment towards their export outlook under the scenario of the Sino-US trade frictions. Talking about trade sources of trade conflicts between the US and China, I think there can be a mixed factors behind that. Well, obviously, one of them would be the source of the trade balance, the deficit between China and the US. Ever since 1976, the US has continued to record trade deficits. But the share of China among that trade deficits continue to increase. Compared to 10 years ago, I think 10 years ago China accounted about 32% of US trade deficits. Now, last year it increased to about 46%. But besides that, there are other factors, maybe behind the trade frictions between the Sino-US trade frictions. One of them may be US discontent about China's trade policy. US discontent about China's policy on technology transfer and intellectual property rights, things like that. And also there may be a perceived threat of the US, of China, particularly like industrial initiatives like Made in China 2025, a industrial policy initiative by China to upgrade its industry. You know what? For all those products fall into the list of tariff imposed by the US, companies can apply for exemption. But one of the criteria that are listed out by the US government is the company need to illustrate that that kind of product has nothing to do with China's Made in China 2025. So we can imagine the reason behind the Sino-US trade dispute. Let me go briefly on some recent development on the trade measures. Starting this year, the US has imposed several rounds of tariffs. In February and March separately, the US imposed, according to what we call the 201 Global Safeguard and the 223 National Security Measures on the items like residential washes and aluminum and steel products. These two initiative policies are not targeting only at China. It's a global measure for all products from around the world. But you see, because these two rounds I think the impact on China is limited because those products exported from China has already been subject to anti-dumping duties years ago. In fact, if you look at the result, say for example, US tariff, it won't improve US trade deficit, but it just shift the source of imports. Say take the case of washing machine, the share of, after the anti-dumping duties on China 3 or 4 years ago, the share of China in US import on washing machine declined, but it only replaced by imports from Malaysia. So it just resulted in a trade diversion. For the Section 301 additional tariff beginning in July, there are already three lists of that. Beginning in July, August, and September, they are targeting solely on China products. Currently, I think the affected amount is about $250 billion US. Luckily, to Hong Kong traders, I think the latest round of tariffs, the third list, it includes a wider range of products, but it does not include traditional manufacturing products like garment, footwear, and toys. So the negative impact to Hong Kong trader may be less so far at this round. Also, China takes some countermeasures, what we call countermeasures, to the US additional tariffs. Basically, they are the first round of that imposed in April. They are targeting the US agricultural products. And then also, responding to the US 301 tariffs, China also has 3 different lists of tariffs targeting at a wide range of US products, amounting to about 110 billion of US imports. And the effective dates, are the same as the US. But the third list, the latest round of tariff imposed by China on US imports, the rate is lower than originally expected, only about 5% at this moment. But then what is the impact on Hong Kong? I mean, the 301 targeting China origin products, it has nothing to do with Hong Kong. But in fact, Hong Kong has nothing, frankly speaking, there are not much manufacturing activities here in Hong Kong. But all those products re-export through Hong Kong will be affected. And also, there are a lot of offshore trade handled by Hong Kong traders will also be affected under the 301 additional tariffs. But a very rough estimation, the two-way trade between US and China going through Hong Kong, that is the re-export trade between US, China going through Hong Kong, was about 45 billion last year. And that was about 9% of Hong Kong's total exports. If we look at so far all the 3 lists of additional tariff, the total value of the products would be about 5% of Hong Kong's total export. So in that sense, it seems to be not a very large portion. And we see that the direct impact should be manageable at this stage, the immediate impact. But of course, there will be other additional negative impact. For example, the downside may be more significant if you consider the supply side, the supply chain multiplier effect. Say, for example, an electronic final product, it may involve a lot of other parts and components trading among different countries. Am I on the right side? No, I'm sorry. Oh, okay. Trading among different countries, among the different parts of Asia. So if we take into the multiplier effect, it may be higher. And also the offshore trade handled by Hong Kong traders. In fact, according to a HKTDC's survey, we did a survey every quarter to gauge the export sentiment of Hong Kong traders. We see that there is a change in Hong Kong traders' export outlook sentiment. This is what we call the HKTDC export index, but it is in fact a measurement of traders' sentiment. It's not a direct translation on the magnitude change in their export, but how would they see the export performance in the coming months? Would it be increase or decrease? With 50 as the boundary, if it is above 50 and we see that there's a positive and expansionary, and below 50 it will be negative and contractionary. In the third quarter, in September, we have the latest figure. It dropped from 54.1 to 35.8. So it is quite a dramatic change in Hong Kong traders' export sentiment. Meaning that they see in the coming months, they will see Hong Kong's exports may decrease. And that negative sentiment is across the board in different major sectors, including electronics, clothing, toys, jewelry, timepieces, and machinery. In fact, the electronics appear to suffer most among all different major sectors. In fact, if you look at the first 2 lists of US additional tariffs, the first 2 lists, if you look at the HS code items in terms of the number, about 70% of them fall into the category of electronics. So it can have a very negative impact on that sector. In terms of major markets, well, except China, I think Hong Kong exporter is still quite confident, optimistic about exporting to China. But then across all other regions, their sentiment turned more negative, particularly for the US market. You can see it dropped from 51.2 to 39.8. And when we ask them what effect has the China-U.S. Trade friction had on their export performance so far? I mean, so far, we see a obvious deterioration in their mood. In the second quarter, we asked the same question. Only at that moment, only 3% said the impact was very negative. But in the latest quarter, in the first quarter, it already increased to 12.7%. And for those being affected negatively, we asked them, what have you experienced? More than 50%, 53% of the traders respond that they have suffered from reducing order size. I think that would be natural if you are imported in the US and you are facing uncertainty, and you will reduce your order size. And we can see that it will continue to happen in the future. Reducing the order size, but they may have more frequent order, but in a shorter delivery lead time. Looking forward, what would they see? I mean, the prospect of export performance under the Sino-US trade frictions. And also, we see that they are getting less and less. They are getting more and more pessimistic. In the second quarter, 7% said they expect the impact would be very negative. But in the third quarter, it already increased to 14.7% already. So in sum, we expect in the coming months, we may see a dramatic slowdown in Hong Kong's export performance. Although we still see Hong Kong's export were performing quite well in the last 2 months, in July and August. Some may attribute it because of the early shipment of traders to avoid additional tariffs. But in the coming months, we may expect the export growth will continue to show a dramatic slowdown, particularly on entering 2019, when the additional tariffs increased to 25% on the third list of products, and also because of the higher comparison base effect. And we can also continue to see reduced order size, but more frequent and quick delivery demand from overseas importers. And also in the medium and longer term, I think we will see a continued trade diversion trend, moving more sourcing activities to other emerging production bases like in ASEAN. Thank you very much.